Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend Podcast. Today is Friday, August 21st, 2026. S&P 500 currently sitting at 76.91. I'm David Zarling. I'm here with Ian McMillan. Great to be back on here with you. Where would you like to start?
Yeah, so a little bit of a whatever week, I guess. Down. Probably we got to be right on the week, right?
Pretty normal.
A little above 7,600. So, guess as long as that holds.
About minus 1.2%. I do feel like I should go back on vacation. You know, normally I go on vacation in August and the market corrects. But when I went on vacation and you guys covered for me, the market ripped higher. So I am perfectly willing to go back on vacation for the sake of this market.
Well, maybe we need a new sacrificial lamb. Maybe I'm the one that should go on vacation.
We should try it. I feel like this is a good beta test. We should.
Yeah, well, A/B test it.
Yeah. You go on your vacation.
Then we'll have an excuse next time because you have to do the B of the A/B test.
Yes. And then Kevin's got to go.
And Kevin's got to go.
And, I mean, I don't want to say Lord willing, but if all three of us did that and the market went up on those, then we just have to vacation together. Right? If all
do that,
vacation and the market went up, I mean, we don't have to go together. I don't want to.
Okay, yeah. We could do that, but not like the whole time.
Yeah. I mean, there's only so much of each other that we can handle. And then, I don't know. But yeah, a little pullback this week.
And in stocks, I guess, other things acting very strongly.
You still have Russell 2000, up year to date versus the S&P. I mean, as long as if we're holding the levels we need to hold on small caps using IWM.
What would you say that is?
Well, I think if you're going to start first and foremost, near term, you'd say 288 on IWM.
Yeah, I could see that.
It's just an initial, but I could also see us all the way into November testing 288. But as long as you're holding a rising 200-day, holding 270, and then this is a massive level, this 240 level. Now, if we're coming back to 240, I don't know that feels comfortable. I mean, that's a bear market. That's a 20+% correction into those levels. I don't know.
Yeah, I mean, you'd be at below 200-day by, I guess 260s, 266, 268.
Yeah, that would definitely be a shot across the bow. But you could see an environment where we're moving sideways in a range into November.
It's a grind. I mean, look at that. You have a different looking RSI than I do.
I'm on weekly.
Daily? Oh, you're on weekly.
I'm on weekly. So on daily, are you saying did that get overbought? Because on weekly, it's...
No, it hasn't been overbought since May.
Yeah, that's a fair
Which point. Is, again, it's not, but it also hasn't really gone below 50. I mean, it's definitely a grindy,
well, let's talk about that from
market.
A technical analysis perspective, right? This is the market through the lens of technical analysis. I think what you're saying is that as long as we're staying in a bullish range in daily RSI.
Would like to see it get overbought. I mean, beggars can't be choosers. We're in an uptrend.
Yeah. So if small caps are going to do that, if you've got financials still holding up, I thought you shared a great chart this morning with the team with Freeport.
Yeah, it looks pretty good.
I mean, that's an economically sensitive stock, is it not?
Yeah, you got copper miners. COPEX, COPEX looks pretty good now. Well, of course, it's on a gap. Of course, everything happens on a gap.
Well, look at how, right, we had sellers at the $60 level back in 2008, 2011. Really nice consolidation here in 2026 and now moving higher on an absolute basis. It's not bad, Ian. I think it's a great highlight. Might be chart of the week. Wonder what that looks like on a relative. Probably my fingers worked. I mean, if that breaks out of that secondary, pretty hard to get bearish on the market overall.
Yeah.
So that must mean materials.
Yeah. What do you think?
I mean,
Doesn't
materials,
it look good on an absolute basis?
absolute. So you can't complain about that on an absolute basis.
I mean, it's a pretty sweet looking breakout on an absolute basis if you go to a daily.
I will do that for you with a couple clicks of the button. Yeah, and if that's being led by, if Freeport is going to
Freeport.
lead materials out of
Are you
this,
buying that material? Are you buying the materials chart though? The XLB chart.
well, if my job is to generate alpha, if I could just park on the S&P and my job is to generate alpha, maybe, but we got a flat relative 200-day.
That thing is.
So that
What about PS? What about PSCM?
PS small cap materials.
Not as good shorter term.
Yeah, but still uptrend. So materials economically sensitive and uptrend. Gold. Should I go to gold miners? Should we talk about that?
Yeah, I guess we have to.
I mean, GDX on an absolute basis, again, holding these levels and moving higher. I think there's some work to do on a relative basis, but I don't think it. If gold miners are clearing this level versus the S&P, let's call that level 0.013 on a ratio, could be off to the races again, right? They had a really strong start to the year, pulled back.
Yeah, man, this move. Of course, I mean, yeah, the relative charts. See, that's what made the move like last November. I mean, really, even if you went back to last August,
Yep.
you had gotten a nice relative and on the absolute chart.
And that was, you got 100% alpha from that break to the top. Now, you also, what was great is that you could use this level here as risk management. If you were participating, boom, you get above it. You know, you did a great job of that with our clients, is capturing a lot of this move here. Be interesting if that gets going again. Some differentiation. And then if we look at, I mean, we probably should be looking at gold miners versus gold.
Yeah. Okay, now look at SILJ versus GDXJ.
Okay. So you're saying, so first on this chart that we're showing gold miners versus gold. Typically,
That's pretty good.
risk on environment for in the precious metal space, you want to see the miners outperform the metal. But now you're saying GDXJ with gold, which is junior gold miners, is more risk on than GDX, but you want me to look at it versus SILJ, silver.
You got two backsplashes.
Do I?
Backslashes.
Thank you. So wouldn't you want to see this opposite? Is that what you're saying? You'd want to see silver junior?
Well, you would think so, but then look at the last run in the 2025 run.
Oh, that's a good point. You're saying this part from here.
Yeah.
Oh, interesting.
I guess you did have silver. Yeah, I guess you did have silver.
Because I can reverse this too.
Yeah, I guess silver did. Yeah, because I had a little bit of SILJ.
Yep. There's some outperformance there. Your point being maybe the same but different. Like if gold miners are going to outperform gold
miners,
silver.
I mean,
we probably should look at silver
versus SLV look like.
We should look at silver miners versus silver. Again, that was a 2025 theme, and now we're seeing it again here. And what did you want me to look at? What did you want me to pull up?
Same thing.
Same thing. So there's definitely things going on. I mean, if you have Freeport Moran doing that, you've got gold miners looking good against gold. Here we have COPEX versus the S&P with this massive base. And was this just a deep retest? Right? Because
the gold miners thing is
10-year base.
Gold miners since July 17th, so about the month. Gold miners at 47%.
So there's some risk on characteristics in materials for sure. Don't hear a lot of people talking about that. We could look at steel versus S&P. More work to do, but this copper miners versus S&P is quite a bit telling to me if that's a retest and we're going to move higher. And if Freeport is going to be a leader in that. Probably going to see this area of polarity getting cleared between FCX and S&P, right? I mean, this is a level that goes back in time, historical memory back to '02, a bottom in '08, breakdown sell-off in 2015. If we break above that, game on for copper miners. What else you seeing out there, Ian?
Guess same stuff as last week. Biotech, energy. Biotech's always feels a little late cycle to me, but
Oh, okay.
held up well.
I feel like you've touched on this before, that biotech.
Yeah, I don't really trust it. Same with regional banks. I think they're stupid little stocks that only do well right before everything poops the bed. I don't actually think they're stupid little stocks. I'm just saying. Well, and look, so then you got KRE, right? So KRE made it all the way back to its, I don't know if these are all-time highs, but they were all-time highs. $78.
And is there going to be resistance again? Which
Relative chart's abysmal.
if this is your first time listening to us or watching this, some people who might not understand technical analysis, I mean, how interesting is it that supply shows up in the same place it was in 2021? But do we really get to be surprised by that? I mean, anybody who bought up in here, if they got back here, got back to even, now I'm selling. It's not crazy. But I will say this, if I use IBB, this breakout is pretty quality.
It is. A lot of the biotech stuff looks good.
IBB versus S&P has a lot of work to do. We have a downward rated trend, but
Look at that.
could also make the argument that we overshot on the downtrend, and now we're possibly going to overshoot on the counter trend move. We have a rising 200-day. Not terrible.
Do you think it's sketchy that energy and gold miners and all that stuff are outperforming? I mean, energy, you want to talk about late cycle.
Yeah.
I'm just saying. I mean, it is holding up. XES, equipment and services, are still terrible. Terrible in the context of this week. They've been red every day. Well, no, they were green Monday. Red every day since then.
I mean, one of the better energy environments, I think, is what you're highlighting, is that if we take XES versus XLE, when you see that move higher, pretty rip-roaring for energy overall. But I will say, like XOM, a leader.
Yeah, XOM's fine.
Like, you look at an absolute chart, I mean, this is about as textbook as it comes. You have
Do
this.
you want to buy? Are you buying XLE here? Should have bought some on Monday, but you know me, just walking around. Last week, got up above 60.
I just think it's on an absolute basis, it's confirmation. But you're saying late cycle.
Like 2022.
Yeah, you're just saying like late 21, early 22. It was energy.
Wait, it's not like it's the only thing. I mean, that was extreme. That was like the only thing working for like an entire quarter, almost.
Well, and I think what you're referencing is this part here, right? You've got, when you see materials and energy lead, can be market top behavior, right? If we do sector rotation analysis, I think that's what you're alluding to.
Yeah.
Which is what we saw late 21, early 22 was materials and energy lead. I mean, there were 2 or 3 months in early 2022 where we generate a lot of alpha by commodity ownership and energy and materials. So could be. Well, I'm open to that for sure. Where do you think we are in when you think about another way to view sector rotation or asset class rotation? I think we've got bonds down. Interesting week for bonds, yes.
Yeah, these dorks in DC trying to do stuff.
It's good alliteration. DC dorks.
They're so stupid. Thinking that and then what did he say? Like they were going to inject like $4 billion. What is a $4 billion going to do?
Yeah. Which we did have a breakout.
But yeah, I mean, if he's the oil stuff, it's all oil and forex and the rates and
Well, it does make you wonder because wasn't when we look at 30-year rates, and let me zoom in because it's this week and I like to zoom out, but
yeah, I just don't know how you can stop that train, man.
we broke out of this range. We get that announcement this week of intervention of trying to basically impact yields. Was that a
And we're right back.
2-day move, and we're still on breakout alert for yields?
Yeah, it came back, retested it. Market said, no, you're gonna have to do better than that, and brought him back up.
So
And they say, and he likes to say, "Oh, we don't want investors to trade on headlines." Well,
you just
I mean,
created,
these dudes create all the headlines
right?
with their little,
But I
oh,
mean,
we got
we're
all the tools.
we're sitting on TLT at 20-year lows, which means we're at 20-year highs in rates.
Again, if you saw that on a stock chart, let's just say that was a daily, short, intermediate term stock chart. Yeah, clearly it has broken resistance. But the other thing that like really makes it pretty lame and I think gives more evidence that those will just go lower is there wasn't even like, I mean, okay, maybe in 2020, a legit bounce attempt, but this is almost like one of those, what do they call it? Like a little H bounce, like a wimpy
Yep.
little, like you gave it one little dinky shot back in 23, 24, and then never even got like this was such a wimpy little, and again, we're talking in the context of 3 4 years, 3 years since rates, put in their big initial bottom.
You're talking this
But yeah,
lowercase h, like this.
yeah, just didn't even really try to create a range, nothing. Just like everyone just knew their fate.
Yeah. Yeah. It definitely reeks of higher rates.
I mean, we didn't even get like any type of like 50%. I mean, there's just like no belief. We never got like a 50% retracement or any type of hold on, well, maybe rates aren't going higher. No, I mean, from COVID on, they said, yep, we are.
Well, and was this area down here just one big flush,
Probably.
right? Because this was just a consistent, when you look at this, it's a
Yeah, it
trend.
was a channel.
It's a trend. It's a variant trend, and we get the flush down here in rates.
And then I thought for a little bit, maybe we're just going to overshoot to the upside.
Yeah, kind of like
Like, I think that, like,
a
even into like 2020, like 2023, you could have said, like, oh man, maybe we're just going to like overshoot to the upside.
you're just saying
But
up
then
in
we
this
just consolidated. Yeah.
area, like, oh, this was just a equalized move in overshoot to the upside. But now, the way this looks, that's no longer a thing.
No, yeah. Once it started going sideways,
Yeah, and
that
consolidate like that.
theory kind of loses.
And now you're talking about an intermediate term 5% move in rates, takes you up to 6.3% in the 30-year. Okay. Bonds down, stocks up.
We'll see. Means they are. That is true. You're not lying. But yeah, we'll see. I don't know if it's like the stocks are going to help the market stay up. Semiconductors still terrible.
And look at, again, international treasuries versus US treasuries moving higher. Semiconductors, you mentioned, tremendous move since 2025, but consolidating. Alpha opportunity has been pretty tough the last few weeks here. And I think you do wonder when we look at seasonal patterns. This is from Jeffrey Hirsch, Almanac Trader. You can expect weakness in a midterm year going into election. That's perfectly normal. What else you seeing?
So how's it all midterm election? Yeah, I could see that. May through the I don't know. That's really it. I don't see too much unless you're into like ESG funds. Those are doing well.
Which are just basically S&P funds.
I guess. I don't even bother to look into Sharia law funds are doing well.
One curiosity I have is, okay, you've got junk bonds outperforming intermediate bonds that are US based, right? So we've got this move out of here, and yet so that's like a risk on metric.
Yeah.
But then we look at triple C credit spreads rising since October. And that's, since October, that's when we've been seeing all this. It's kind of been calm on the surface, on the market surface, but so much volatility underneath it. It's a little bit of a warning shot, and probably would want to see this cool off. And maybe it's not going to cool off until November, which would just be coincidentally with midterm elections.
So I gotta wait, huh? That's what you're telling me.
Yeah, I mean, sometimes
2.5 months. Lost to sea.
sometimes consolidations happen. I mean, would it not be normal to see S&P move into November and then move higher? I don't know. I wish I knew.
That looks pretty lame though.
For the next few months, it does for sure. Hey, Brewers Braves. Brewers Braves coming up.
Golly, dude, we just got swept by the Twins.
Wins are good, dude, though. No lie.
We did. I think we had a makeup game against the White Sox. I don't know. We'll see.
Like they're doing Brewers Braves, but I think their third game, or I don't know how they're doing, is like a Little League World Series game in Pennsylvania, like a neutral site.
No.
Yeah,
Are they playing on the Little League field?
that would be amazing.
Or it's be like 7 home runs.
That would be incredible.
Yeah, I mean the Braves. I mean, we were hot there. June was good. I mean, August or July was good. August has been.
I mean, Braves are 5 games up on the Phillies.
I mean, well, we were like 14 games up.
Oh, really?
You remember their start to the year?
Yeah, but it should be a good series. Leaders of the National League East, leaders of the National League Central. Should be good, I think.
Sure will be.
I don't know what the deal is with American League, how you can have this 500 team leading the division. It's crazy. We'll see. I know it's your brain.
I'm zoned in on football right now.
Are you? What do you got? What do you?
Just ready for it to start.
Yeah, when does college football start? It's got to be like
a week. It's got to be like a week from last night.
how the Gamecocks.
Pretty sure it's a week from last night. So does that make it like the 28th?
I mean, they got games here on the 29th. Bunch of them. So there's got to be way earlier.
I feel like it's going to start that. Okay, so yeah, I guess they got some week 0 stuff on Saturday, the 29th. I mean, not that much good stuff. Will I be tuning in for Hawaii Stanford though? Probably.
Yeah.
A little Memphis UNLV, 10 p.m. Eastern.
Staying up. How are the Gamecocks going to be this year?
Probably 10-2.
It's pretty good.
You heard it here first.
I did. I'm excited for you. Yeah, we'll see how the Badgers are. Not sure. They've been hyping them. They finally changed the way they're doing business, so we'll see.
It's good. You got to spend the money nowadays.
I guess. Yeah, and other news before we wrap up. Watson Wright and Tom Dorsey passed away this past month. Pioneers of using point and figure, and Dorsey Wright and Associates. Kind of crazy to.
That was a big brand in the TA world.
Yeah, and to have those two titans pass in the last 10 days is kind of crazy, but got to recognize them. I never got a chance to talk to Watson, but Tom I talked to several times, not as if I knew him as a friend, but a person who was willing to share when we were at CMT symposiums or at their conferences in Richmond, Virginia. Seemed like a good dude, pretty down to earth. Anything else, Ian, that you want to highlight before I ask people to give us a high ranking and cover the supporter of this podcast, the Adapt to Select TTF? Anything else you want to cover?
I don't have anything. I mean, breath is still okay, right?
Yeah, breath is great. It's the high beta rotation underneath the surface. That's hard. A lot of dispersion, negative momentum, if you will, for a few months here. Makes it hard, but rotation is the lifeblood of markets. But it's, I don't know, to me, it's fitting the perfect characteristics of a midterm year where summer doldrums, high dispersion, high beta rotation, out of leadership. And then all of a sudden the final 2 months are just rip roaring back into leadership and momentum. So
That is indeed how it usually goes.
yeah, just got to be patient. Well, appreciate you being on here and want to highlight the Adaptive Select ETF, which supports this podcast, listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength, using proprietary identification methods. The Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. Well, thanks for being on here again, Ian. If you guys enjoy watching and listening to this, we do ask you to share with your family and friends and give us a high ranking on your platform of choice. It means a lot to us.
Have a great weekend, everyone.